Welcome back. I'm Pratap here. Today is the 10th March 2024. In this video, let us analyze Nifty 50 and Bank Nifty with the help of supply demand zone chain. Even before that, a small announcement please. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. All the training videos I kept in a playlist supply demand zone price action course at our NeoStock YouTube channel. Even I have also provided the link to this playlist in this YouTube video description. There, go to the video description, click the link, you will get into this page and then scroll down to the bottom of this page. Here, starting from lesson 1.1, all the training videos are available in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this YouTube video description. Please join in the Telegram channel. It will be helpful to you. Each time when we release a new video, we will provide an update in the channel. Now let's get into Nifty Bank Nifty supply demand zone chain. Okay. See, there haven't much changes in Nifty and Bank Nifty for the weekly and above time frames. So that is the reason why let us analyze the charts from daily and below time frames. In case if you want to look into daily and above time frames related analysis, please look into the last two video sessions. Last video I have analyzed the Bank Nifty chart. Even before that I have analyzed the Nifty chart. So in this video I will analyze both the charts but by using daily and below time frames. So I am going to our NeoStock software supply demand zone chain. First let us look into Nifty 50. And we will generate zones from daily and below time frames. So I have selected the time frame as daily. Now I am generating the supply demand zone chain for daily time frame. Okay, the demand zone chain is generated. So the most recent demand zone is and 28.2. One base candle is created. We have already drawn that zone. This is the one drop candle, 28 February base candle, and then on 1st March we have a zone. This is the most recent demand zone, but this is a normal demand zone as per our software. The high liquidity zone is on 21st 12. This is the one. So whatever we have drawn in last 2 weeks back, still it holds good. There aren't much changes. But this is a pierced zone. You should not forget that. So already pierced twice. So that means this is not a valid zone. This high liquidity zone is not a valid zone. This is the point you have to remember. But inside, within this area, the new zones are created related to 75-minute zones that we discussed in the earlier videos. So let's don't get into that discussion. Let us focus on the most recent action. So we have only a demand zone. This is an all-time high demand zone. Because no supply zones, this is the most recent all-time high demand zone. So now let us look into the recent 75 minutes and 125 minute zones. So I'm going back, selecting the 125 minutes time frame, and let me generate the chain. And the most recent high liquidity 125 minutes zone is on 14th February at 1:25. 13:25 means 1:25 p.m. 14th February. Have we drawn that? Let us look into that. So I am shifting the time frame to 125 minutes. This is the one, 14th February. This is already we have drawn 2 weeks back. Actually, Nifty picked up the orders from this area, from this zone. See here, we have 3 base candles and a drop candle and a rally candle with hidden gap. I mean a hidden body. See, we have 3 base candles and the 16th February 9:15. This is the one. So during the last 2 weeks, Nifty picked up the orders from this zone. On 22nd February, it picked up the orders from this zone, and again on 24th February, it again picked up the 28th February, 29th February, it picked up the orders from this zone, and now a new daily zone is created here. That is what we have seen. This is daily zone. This 75 minutes high liquidity zone is the main reason behind creation of this, because it picked up the orders from this zone and created. Because this is a high liquidity area, within this area again institutions created a new zone, but this happened in the higher time frame now. This is a daily, this is not a high liquidity zone, this is a normal daily demand zone, but inside 125 minutes high liquidity zone. The same thing is also 75 minutes high liquidity zone. This is a daily demand zone. That means the recent daily demand zone, this is the all-time high daily demand zone, is created with the help of this 75 minutes or 125 minutes high liquidity demand zone. Even though this daily demand zone is not a high liquidity zone, but below that we have a 125 minutes high liquidity demand zone. That's why indirectly this daily zone also will act as a high liquidity zone, but not daily time frame, 125 minutes time frame. That is the point we should understand. So basically this 125 minutes area is having a lot of liquidity. Because it is having a lot of liquidity, it is able to create a new daily demand zone from its area. So it's a very important area. Probably Nifty will get a very strong support within this area. This is the one important point you should understand. Nifty will get a strong support from this area. That is what I am trying to say. If you draw this the daily demand zone as a type 2 proximal entry, see now almost it fit into this 125 minutes or 75 minutes high liquidity demand zone. Okay, now again we will move back to 125 minutes. The recent 125 minutes demand zones are created. I am not drawing them because I am focusing only on high liquidity zones, because we need to identify the real support and resistance areas within the Nifty. But this is the most recent demand zone, 125 minutes demand zone. That is 6th March 9:15 candle. This is the one, 6th March 9:50 candle. This is the 125 minutes demand zone, normal demand zone. Okay, for reference purpose, let us draw. This is a normal demand zone. Again, within this 75, 125, another zone is also created, LOTL zone. We have a drop, base candles, 3 base candles and a rally candle. Probably the one below this, 29 to 9:15. So okay, software consider this as a ERC candle and a base candle, rally candle and follow through candles. So this new 75 is also part of the Earlier 75, LOTL. Inside this daily, this is the 75. This is the LOTL concept. This 125 is overlapped with the high liquidity 125 minute zone. So that's why let's don't focus much on that. This high liquidity area, this high liquidity zone probably will act as a strong support in the upcoming week. That is the point you have to understand. But within this area, if there is any high liquidity, 5 minutes or 15 minutes, probably they give a strong support during the coming week. That we will see later. So at present, this is about 125 minute zone. Now let's move on to 75 minute zones. So the most recent high liquidity zone is the fourth item. That is 14.2 for the same thing. 14.2 is this is the one. Changing the time frame to 75 minutes. This is the 14th February. We have the same, whatever we have already drawn. This is the most recent high liquidity zone in 75 minutes. What is the normal high liquidity zone here? On 6th morning 9:15. This is the one. 6th morning 9:15. These two candles and rally. That means this is a 120 most recently available 125 min or 75 min demand zone. But remember, this is a normal demand zone. That's why I didn't add the word HLQ, high liquidity I didn't add. If there is no HLQ, you have to assume it is a normal demand zone. But this is the recently available at present. For the current price, this is the most recently available demand zone. This may act as a support or may not act. There is no guarantee. But definitely this high liquidity will act as support. See, previous week how it strongly acted this zone. Twice it got support from here. That means last week or before that week, you would have got 2 trading opportunities from these zones. Okay, this is about 75 minutes. Now let's go back to previous screen, and now let us change the time frame to 25 minutes. Let us generate the chain, 25 minutes chain. From now onwards, you will see the most recent support levels based on the high liquidity zones. So let's start with third one, because this is a third one is already pierced. So let's don't focus on this. And these two are the most recent high liquidity zones, and second one is already tested once. So let's look into these two high liquidity zones. Probably next week they will act as some support for Nifty. But observe one point, even till 25 minutes, Nifty is not having any supply zones. Okay, first let us draw the second one. This is the 1st March 10:15, 10 o'clock 5 minutes, 2 base candles. 1st March 10 o'clock 5 minutes. Changing the time frame to 25. So where is 1st March? This is 6th March. This is the 1st March. This is 10 o'clock. This is the leg-in. These two are the base candles, and this is the rally. So this is the 25 minutes high liquidity zone. This is the 25 minutes high liquidity demand zone. See, the recently created 125 75 minute zone picked up the orders from this high liquidity zone and created this 125 minutes. See how institutions are making use of these high liquidity zones. and then creating higher time frame zones. Actually 25 minutes is a lower time frame zone, 125 minutes is a higher time frame zone. So they are picking the orders from the lower time frame and then they are creating higher time frame. Generally, you know what happens, these are all the this is how institutions set the traps. Because it is 125 minute zone, most of the time what we think, let us assume there are no high liquidity inside this. What we think, this is a 125 minute zone, we want to pick up the orders from here, but what institutions will do, they will try to violate this zone. And the 75 minutes or 125 minutes demand zone traders, they will think that this zone is violated, and then because it hit the stop loss, they will exit from the trade. How they will exit? With short orders they will exit. Shorts means bears, and all those short orders, that means are trapped inside this high liquidity demand zone. So institutions will trap all their stop loss orders, that means they are all bears. Now all these bears are trapped here. That's why we call it this one. 25 minutes high liquidity demand zone can be called as a trap, a bear trap. See how cleverly they created. They picked up the orders from here and then they created a new zone. So that means they provided an entry for 125 minutes demand zone traders. If any 125 minutes demand zone trader wants to take a trade in this zone, they have to keep a stop loss below 25 minutes high liquidity demand zone, not under the 75 minutes demand zone. If the risk is permitted, then they have to plan the trade. If risk is very high, you have to go for position sizing. But you cannot exit. If you exit from 125 minutes demand zone digital line, you will be trapped inside this 25 minutes high liquidity demand zone. See how clever institutions. See, previously also we have seen, right? Inside this, from this 75 minutes, 125 minutes demand zone, they created a daily demand zone. Look into this daily time frame. The recently created daily zone. This is a drop base rally, is picking the orders from this 75 minutes demand zone. Strictly speaking, there is a 5 minutes bear trap also there just below this. Of course, for this bear trap, the main source is the 75 minutes, 125 minutes high liquidity zone. Institutions are making a very clever move. That is what we should understand. These are all how they are trying to trap us. But who is helping us? These high liquidity zones are helping us. We are based on these high liquidity zones, we are trying to understand how institutions are thinking and trying to trap us. Okay, now let me go to this 25 minutes. We are at present analyzing this. So here we have this 25 minutes high liquidity demand zone. There is one more high liquidity demand zone they created. That is recently, the most recent one. And it is a fresh zone. This is on 6th March at 12:10 after the two base candles. So this is the one. 6th March. Here we have two base candles. So that means inside this 25, 75, probably they will hold for some time, because this is a high liquidity zone. This is a 25 min high liquidity demand zone. This 25 minutes is high liquidity. Inside this normal 125 minutes or 75 minutes demand zone. Probably this will hold the prices during the next week. If next week supply is very strong, probably it may give one entry or two entries, and after that this will be violated. If demand is very strong, in case if prices come here, then it will give a very big push. That is also possible. but we get better clarity once we look into 15 minutes and 5 minutes. And moreover, this is the most recent this is the most recent 25 minutes zone. This is the most recent demand zone. Not only recent demand zone, this is also a high liquidity demand zone. Both the points you need to observe. The most recent 25 minutes demand zone is also a high liquidity demand zone. So probably this will be the immediate support for Nifty 50 during this week. But we get clarity once we get into 15 minutes and 5 minutes. Okay, now we will generate 15 minutes. So going back and changing the time frame to 15 minutes. And I am generating the chain, supply demand zone chain. And here this is the 15 minute supply demand zone chain. The most recent high liquidity zones are 4th and 5th. We have to look into 4th and 5th. Let us check whether they are available or we have to draw them. And the 5th one is on 14th February. I think we have already drawn this. 14th February is somewhere here. Yeah, this 15 minutes high liquidity zone we have already drawn during a couple of weeks back when we drawn this chart. Okay, and what is the next one? The next one is already tested 2 times. It gave a good entries. Probably during last 2 weeks it has given the entries. 3 rejections from this zone. When it was created on 29th February. 29th February, 10:15, 2 base candles. February. So within this zone, within this newly created daily demand zone, there is a 15 minutes high liquidity zone. So this is the 29th February at 10:15. Let me check. 29th February, 10:15, 2 base candles. Okay, this is considered as a leg candle. These 2 are the base candles and a rally candle. We can also consider this as a drop, 3 base candles and rally. Maybe this candle is having body greater than 50%. When it is having greater than 50%, our software is having intelligence. It may consider, if it is less than 75%, depending on the situation, it may consider either leg candle or base candle. Anyway, manually, if I consider this a drop, 3 base candles and rally. But software consider this as a leg candle, these 2 base candles. Anyway, it doesn't make much difference. 3 candles I am considering and then drawing the zone. This is the 15-minute zone. So it picked up the orders. This is the first time and second time and third time. It picked up the orders from this zone. So this is a 15 minutes demand zone. This is 15-min high liquidity demand zone. Okay, but above we have 25 minutes high liquidity demand zone. And again here we have another 25 minutes high liquidity demand zone. But 15 minutes demand zones are there. At present they are the normal. But what is the most recent 15 minutes demand zone? Let us look into that. See, it is already tested 2 times. That means holding the prices. Probably this could have been inside a 25 minutes demand zone. That could be the reason. Let us check. This is on 7th, 7/3/24. 7/3 means this is the latest one. Seven 3/10/30. This is the most recent zone, 15 minutes demand zone. This is a normal demand zone. For the time being, let me use light color. This is the most recent 15 minutes demand zone. This is not a high liquidity demand zone. Please remember, this is not high liquidity demand zone. This is only a recent 15 minutes demand zone, just for reference. Inside, if there is any high liquidity 5 minute zone, probably we can consider. Otherwise, we will give least importance to this. That we will see in the next time frame. Just for reference purpose, I have drawn. This is not a support. Please remember, this is not a support. Only support we will consider only high liquidity zones. Just reference purpose I have drawn, just to check if there are any 5 minutes high liquidity demand zone inside this. Otherwise, we can delete this later. So now I am moving back to, I am going back and changing the time frame to 5 minutes. Let us generate 5 minutes chain. So what is the most recent high liquidity zone here? The third one. The third one is the most recent high liquidity demand zone. But remember, C_DZ is not powerful in lower time frames compared to S_DZ. The 11th one is stronger one. When it is, this is on 29th February. 29th February. Let me change it to 5 minutes time frame. Here, this is 29th February inside this. What is the date? 29th February. $15.20 candle. After that, one base candle. So this is the one. It is saying high liquidity, 5 minutes high liquidity demand zone. Let us check once again. 29th February at 15:20 is the 29th February 15:20. This is the leg-in. We have a one base and we have a rally. Where is the text? Okay. And after that, the most recent high liquidity demand zone is the third one. But this is C underscore DZ. It's not as powerful compared to S underscore DZ. That is the point you have to understand in lower time frames. In weekly and above, C underscore DZ is the much powerful. Okay, at present we are seeing in 5 minutes. Maybe we may expect one entry or two entries depending on the market conditions. Okay, let us draw the third one. This is the immediately available high liquidity zone. This is on 6th 1410 candle, after that 3 base candle. So here it is, we have the zone. So this is just before this 15 minutes demand zone. Probably this may act as some support if demand is very strong on Monday. We don't know, this 15 minutes zone might be violated. Anyway, we have drawn this for reference purpose to check any high liquidity zones inside. So that is the reason why I am removing that, because we are considering high liquidity zones as support. So this is the first support. If this is violated, this is the next support, 25 minute zone or this 25 minute zone. This 25 minute zone will act as a trap, bear trap. So remaining zones are normal zones, and even here no supply zones. That means at present Nifty is not having any supply zones. Nifty is at all-time high. So this is the all-time high. Let me draw the all-time high. Horizontal line. ATH. So here we got a text ATH. So this is at present, this is the all-time high. So what could be our immediate support? Let us draw the lines. This is the range, probably on Monday. If this is violated, maybe Monday Nifty may go even further all-time high. That possibility is there. But in case if Monday, without going to all-time high, if prices get into this 5 minute zone and took a support here, probably we can expect this could be the target. After that, Nifty may go further up. Or another possibility is also there. Nifty may create some lower time frame supply zones on Monday and again push the prices till this demand zone. That possibility is also there. This is the first target, first range, and the next range is here. We have a 25 minutes high liquidity zone within this 75 minute zone. This could be next range. In case if this 5 minutes high liquidity zone is violated, then 25 minutes we may get, and this will act as a trap. If this 125 minute zone is violated, this will act as a trap, and this will be the next range, Nifty's range. I'm talking about support and Okay, and again we have another 5 minutes, and probably here the order flow will be very strong if Nifty comes to this area. And this is the fourth range. And finally the real order flow, earlier it picked up from this area, from this zone. So there could be a different order flows. So let me adjust. Okay, so let us look these ranges from daily time frame. Let us see how they look. All mixed. Okay. Okay, fine. So this is about Nifty. Now let us look into the Bank Nifty. Bank Nifty also, let us start from daily time frame. Bank Nifty, this 5-minute zone worked very strong during the last entire week. Because the last week, the last Sunday, we have identified these ranges. So Bank Nifty moved within this range only. Now Bank Nifty moved to the supply zone. Let us see whether these supplies will do anything during this week. If they push the prices down, probably first this 5 minutes high liquidity zone has to be violated, and after that it will get into this 25 minutes high liquidity. But even before that, any new high liquidities are created during this push. That is also, let us look into that. First let us start from daily time frame. Nifty Bank Nifty. I'm generating the chain on daily time frame. Okay. So Bank Nifty is having a strong high liquidity zone, that is the 2712 2023. This is the most recently available demand zone. So let me shift to, this is Bank Nifty. $27.12. So when is 27.12? So I'm sorry, this is the supply zone. My bad, I am looking for demand zone. Sorry, Bank Nifty is already having two supply zones, high liquidity zones. We have already drawn them here. We have already drawn. The most recent demand zone is fourth one. When it is created, 28th February. This is the one, 28th February. This is the most recent high liquidity demand zone. We have drawn this zone during our last week analysis, Bank Nifty analysis. So we haven't seen any changes after this. So that is the reason why and we have a recent supply zone when it is created 4th 1 2024. So that means last week nothing, there is no action on the daily time frame, no changes. So let me go to 125 minutes time frame. Let me generate the chain. It is a costliest operation, taking time. So the most recent demand zone is a high liquidity demand zone. This one is created on 25th January. This is also we have drawn during last week. 25th January. Let us check 25th January. Oh, we are in daily time frame. Let me change it to 125 minutes. The most recent demand zone, high liquidity demand zone. Is the first one, C_SZ. This is the 16th. Oh, this is supply zone, I'm sorry. The demand zone, high liquidity demand zone is on 25/1. is where is 25/1? This is 24. This is 25. What? 25 9/15. Okay, this is a drop base rally. This drop base rally is the one we have already drawn. This is the most recent high liquidity zone. This is 125 minutes high liquidity zone. And the supply zone is 16/1. Somewhere here we have drawn 16/1. This is the one, 16/1. We have 75 minutes, 125 minutes zone is there. So no changes. So still remains same. So let's go to 75 minutes. So nothing happened in 125 minutes during this week. And here also, if you look into the supply zones, 29/12 we have already drawn, 28/12 and 29/12. Whatever the zones, high liquidity zones, we have already drawn in the chart. But recently, are there any changes? No. What is the recent demand zone? This is 5th, but it is a normal demand zone. When is the high liquidity demand zone? This is 14/2. So last week we have drawn all these zones. That means 75 minutes also, no changes. Whatever we have drawn during last week, the same thing. In case if you didn't listen last week video, please go and listen the last week video and then continue with this analysis. Because once again, if I discuss whatever we discussed during last week, same, it is a repeat, unnecessarily waste of time. So instead of that, you go to last week video and go through that to understand these 125, 75 minute zones. Now let's go to 25 minutes. Probably some changes you might see in 25 minutes time frame. Let us verify. Yeah, in 25 minutes, if you look into the high liquidity demand zone, this is on 5th. This is the recent high liquidity demand zone. This is 11/20. Let me change it to time frame to 25 minutes. This is the one we have already drawn. During last week analysis, we have drawn this zone. So no changes in the during this week. That means during this week no 25 minutes high liquidity zones are created. There is a demand zone, but this is a normal demand zone, supply zones. And we have two high liquidity. This is okay. The first one is a high liquidity. This is on 5th. This is also we have drawn already. Somewhere here we drawn this. Fifth means here. Here 15 minute zones we have drawn here. So no changes here also. So now let's move on to 15 minutes. See why we are looking for latest high liquidity zones? Just to check whether there are any changes in the support and resistance levels. Okay, 15 minutes. On 5th we have a high liquidity demand zone. But it is already pierced 3 times. But still it is below this something is holding the prices. Below definitely there is a trap. That's why again and again this zone is pierced. It's not violating. If a zone is pierced and not violated means below the zone you have a trap. So when it is 4th March. So let's go to 15 minutes time frame. Fourth March, 12:15. Fourth March 12:15. After that 6 base candles. 1, 2, 3, 4, 5, 6. So here we have a zone, but see this 15 minute zone is pierced. Actually it is getting the orders from this 5 minutes high liquidity zone. This is the reason. So anyway, that is a pierced zone. We don't look into that. Actually this 5 minutes high liquidity zone is actually holding the prices. See, last week we got several entries. This was the first entry. This was the second entry. We got a very good move. That is what we discussed during last week, our HLQ zone analysis videos. Twice Bank Nifty has given opportunity from this 5 minutes demand zone. So anyway, it is pierced. We need not worry about this. Remaining null are whatever we have drawn previous week. So this is the most recent high liquidity zone. When it was created, 7th it is created. A new high liquidity zone is created. And the 5th also a new high liquidity zone. First let us look into the most recent one. 7/3/2024, 10 o'clock, 1 base candle. 7/3, 10 o'clock. This is the one. This is a high liquidity, 15 minutes high liquidity supply zone within the sellers area. This entire red color is sellers area. This is a newly created during last week. 15 minutes high liquidity supply zone. See how it holded the prices and then pushed the price. Let me change the color to supply zone. This is the 15 minutes high liquidity supply zone. and there is one more. This is on 5/1, 5th January. This we have already drawn during last week, somewhere in these areas. Somewhere in these areas or here. Last week we have drawn. So during last week, the newly created high liquidity zone is this is the one. And it holded the price and then pushed it down. So now we will shift to 5 minutes. Let us generate the chain. Okay, 5 minutes chain is generated. Now let us look into the most recent demand zone. So 9th one is the most recent demand zone created recently. When it is created on 7th, 7/3 at 10:45. So let me go to 5 minutes. So this is the one, 7/3, 10:45. Two base candles. So in the supply area, within the supply, a high liquidity created, but its life could be temporary. Unless supply is very strong, this will be violated. If demand is very strong, this will again hold. Who knows, all these supplies will be violated and new all-time high we may get. That possibility is also there. But at present, during last week, it holded the prices on last Friday. This is a 5 minutes. High liquidity demand zone. See here, the price movement between 5 minutes high liquidity demand zone and 15 minutes high liquidity supply zone. This is how the prices were moved on last Friday. Last Friday, this is only the range. Because now fight is happening between two high liquidity zones, but one is 5 minutes high liquidity and another one is 15 minutes high liquidity. So one of these zones has to be violated. So within this 15 minutes, again new 5 minute zone is created. See here, rally, two base candles and drop. That's why again pushed up to here. Now we have to see tomorrow whether this 5 minute zone will be violated or with a gap up, this 15 minutes high liquidity zone will be violated. We have to see. Based on that only, the price direction will be, we will get clarity. But anyway, here this is the most recently created high liquidity zone during last week. Apart from that, what is the other one? 14th. 14, serial number 14, we have a high liquidity zone. Already tested 3 times. It is holding very strong. That is 1/3, 1st March. This is the one. We already drawn this last week. This is the 1st March. This one actually holded the entire prices during last week. I thought this will be violated and then below it will get the support, but didn't happen. It is having a lot of liquidity during last week. Holded the prices. If this 5 minutes high liquidity demand zone is violated, again probably it will get support here only. Bank Nifty will come down up to this level because a lot of liquidity in this. See here, prices, it is not letting the prices to go below this. At the proximal, the zone high of the 5 minutes high liquidity zone itself, the order flow is very strong, not even going a little deep inside. Maybe institutions' goal is to violate this all the supplies and push Bank Nifty into all-time high. That could be their goal. But other institutions, they are bears, because we have two types of institutions. One is bull and another one is bear. Bear also not letting prices go beyond this. See, last week prices went to the supply, and supply after this it is not letting the prices. Now again they created a new 15 minutes high liquidity supply zone. So what will happen on Monday? But before that, let us check supply zones. Any high liquidity supply zones they created during last week? Yes, institutions keep on created multiple high liquidity supply zones. Anyway, this is the 16-1. The 5 minute zone is violated. Actually it is PS, not violated. And this is the one they created on last Friday. They created. Last Friday means Thursday, our working day, 7th. 7th, they created two high liquidity zones. Sorry, this is demand zone. 9th one we have drawn the demand zone. They created, this is the one, 7-3. That is what I have drawn. We have drawn 15 minutes. Now we are at 5 minutes, right? Yeah. This is the 5 minute zone. 7-3 2024 at 10:15. This is the one. This is the rally candle. 4 base candles. 1, 2, 3, 4. Drop. That means the same zone is acting as both 5 minutes as well as 15 minutes. Both 5 minutes and 15 minutes high liquidity zone. So this is what you should understand. Why this is very strong during last week? We have a 15 minutes high liquidity zone. Inside again we have 5 minutes high liquidity zone. Both are zone confluence concept. Now again within this zone again they created rally, 2 base candles and drop. Again another zone is created. Liquidity they keep on adding here because this is a supply area, sellers area for Bank Nifty. So what could be the range on Monday? The immediate range is this 5 minute zone to this 15 minutes high liquidity or 5 minutes high liquidity. One of these zones has to be violated on Monday. If it is not violated, Nifty range will be limited to this area. Let us see what institutions will do. But at present, the range could be from here to here. This is the immediate first range. So now this range has to be violated either to upward or to downward. Let us assume it is violated during downward. Here again this 5 minutes high liquidity, strong demand is there. But one point you should not forget, the demand is very strong because prices are not entered into the supply. Now prices entered into the supply. Now supply is activated. The price direction is also changed now. Now bears will keep on creating new supplies and they might violate this 5-minute zone. That possibility is also there. But before that, this 5-minute zone has to be violated. This high liquidity. This is the first support and resistance. And the second possibility, let us assume demand is violated. If that is the case, the range could be like this. During next week, this could be one range. If demand is very strong, what will happen? The range could be towards the upside. Let us assume if the demand is very strong, this could be the range. This is immediately available during next week. If supply is very strong, even if this 5-minute zone is violated, the next range will be like this. These areas. If supply is very strong. Finally, where Nifty will get support, if the supply is very strong, this area they will get support. See here we have a daily demand zone. Below that, institutions set the trap, the high liquidity zone. So probably from here the prices will go. This could be another possibility up to here. I don't think Bank Nifty will go beyond this. How many points it should be? 2,500 points has to be down if Nifty has to come to this. So if market become bearish next week, then it will happen. If market is not bearish, probably the supplies will be violated, or maybe Bank Nifty will be moving within this small range. So that's why next week this is what, whether it is bullish, this could be the range. If it is bearish, either this could be the range or this could be the range. But let us check. But what we did, we identified the support and resistance levels. This is the immediate support and this is the immediate resistance. If one of these levels are broken, these are the next levels. That way you have to understand, if this level is broken, this could be the next level. Because at present we are at the supply area. Bank Nifty is at supply. It is at 5-minute supply, 15-minute supply, even 75-minute supply. Everything is within this area. Now let's go to the daily time frame. You will get clarity. See here, completely this is supply areas. We have a weekly supply zone. Inside the weekly, we have a daily supply zone. Inside the daily, we have 75-minute supply zone, and inside 15-minute supply zone. There is one more 75-minute supply zone here. Again, inside we have 15 minutes and 5-minute supply zones. Zone confluence. Everything is inside the weekly supply zone. And moreover, Nifty entered into this supply zone. Which supply zone? The 75-minute supply zone it entered. Even daily supply zone, you see, this is the daily. Already entered into the daily. Inside daily, it entered into the 75-minute supply zone and even 15-minute supply zone. And one of the 15-minute supply zone during last week was pierced. But 75-minute supply zone was active. See the push. During this push, one institution created a 5 minutes high liquidity supply zone, even 15 minutes, the same thing 15 minutes. And another institution created a 5 minutes high liquidity supply zone during last Thursday, that is the working day. See after that what happened? Prices moved within that area only. None of these levels are broken. Now fight is happening between one institution and another institution. One means need not be one, a group of institutions who are bulls, another group of institutions who are bears. That means a fight is happening between bulls and bears. That's why price moved within this range only during Thursday. So one has to be violated. That is the key essence you need to understand. So this is about Nifty and Bank Nifty analysis. Hope these new levels will be helpful for you for your next trading during the next week. So let's take a break here and we will continue in our next video. Thank you.